So you're looking at the price of BitMine all day or SBET and you're wondering where it's going. Now take a step back and remember what your thesis is. Your thesis is simply ETH is going to go up. Now there's a lot of catalysts that are going to make it happen, but in this video I want to talk about the fundamentals about how you get there. So we're going to take a look at the fundamentals and the data to tell us where ETH is going. We're going to check out these 5 things. First, the market update where ETH and BTC are. Next is where are we within this cycle? You got to have a time frame. You got to have a big picture of where you're going. And then the bullish case for ETH. Why are we so bullish on ETH? How does ETH actually get to 8 to 10Ks? Does the candle just shoot up and we pray for that Hail Mary? And then finally looking at some of the myth around the supplies of ETH. And by the end of this video, you should get a very good feel for why ETH is heading to 7 to 8Ks within 2025 and then 10 plus Ks in 2026. So welcome back, guys. My name is Colin. For those of you who are new, what I do is I do fundamental analysis on crypto projects and stocks that I feel have long-term value. Before we get started, remember that none of this is financial or investment advice. The crypto and the stock market is extremely volatile and you could lose all your money. So make sure you do your own due diligence and research before you get into anything. Furthermore, this is not a sponsored video. I have nothing to sell you. These are just my raw thoughts from a guy who's working 9 to 5, like most of you who are interested in this topic. What I ask is that if you enjoyed this video and you learned something from it, give it a like, consider subscribing. And if you're on X, please follow me on X where I can tweet things out much faster than I can make a video. So if that out of the way, let's get started. So first off, ETH had a good day today. It was up 5% at 4,300. If you look at its 1 month right over here, it's actually up 15-16%. Some people are freaking out just because ETH had a little bit of a pullback. And then of course, BTC sold off the other day and they panicked. Right away, they run towards the screen and ask, when is BMNR going to drop to $11? Okay, so I don't want you to be that person who's panicking. If you look at the overall data, ETH is actually up 67% today within a 1 year period. And if we zoom out and take a look at the big picture, we know that August is traditionally a bad month. People go away, they go on holidays, the stock market sells off. Same for Bitcoin. If you look at the last 3-4 years, you can see that it's down roughly 11, 10%, 13%. This year, August, we're 2/3 of the way through and we're actually not doing that bad. And if you look at the data for ETH, it's really outperforming Bitcoin in August, up 17, almost 18%. And then if you consider July together with that monstrous 49% up, it's actually 67% during the past 2 months. So ETH is actually looking really good compared to the last 3 years where it's all red. This year, it's really outperforming. And we see that volume coming in. We know the treasuries are buying. We know the ETFs are buying. There's a lot of buyers within the market for ETH. And then the other thing that really made the market nervous this week is the upcoming speech by the Fed Chair Jerome Powell at Jackson's Hole Economic Symposium, basically where all the central bankers get together, the economists, the academics, and they talk about monetary policy that can influence the rate decision that's coming up in September. Because we know that interest rates will affect monetary policy. Lowering interest rate floods the market with cheap money. They continue to print, and what happens to risk assets like Bitcoin, Ethereum, stocks is that they continue to go up. So Jerome Powell's tone here, the entire market is watching. Now, my own opinion is that he will come out sounding hawkish like what he usually does, but the end result will be a dovish result. If you take a look at this article right over here in the New York Times, it shows that 2 Fed governors have dissented from the central bank's decision to leave rates unchanged. So right over here in July, we had the 2 Fed governors. The last time that happened was in 1993, over 30 years ago. So you could see that Feds continue to pivot. And we look at the CME Feds Watch right over here, we could see that there's an 82% chance that a rate cut will happen as of today. So overall, from a macro global perspective, I think we're in a good position heading into September with the central bank getting ready to cut and flood the market with cheap money. So the next question is, where are we within this cycle and where are we heading? Even though history does not repeat itself, it oftenly rhymes. So every time the BTC drops like 2-3%, the market goes out and it asks us this question all the time. And then they show this meme right over here, which is really reflective of the sentiment of crypto Twitter or X Twitter, where people start thinking about all wild thing. Are we in the bear market? Are we in the recovery phase? Where are we within this cycle? So taking a look at data from past cycles from the 2012, 2016, 2020, and then 2024 to current date, you could see that post-halving all the way up to roughly about 5 to 550 days, that's when the cycle tops out. Now, the 2012-2013 cycle is a little bit different. We'll omit those data as we're looking at it. But looking at this graph, we're in that final 100 days, that last 100 days. And of course, this cycle will be a little bit different from the other cycle. But if I just take a look at the averages of the cycle together, and if we lay it out like this, you can see from 2012, 2016, 2020 to current date, these are all the halving dates. This is how long it takes from the halving to go towards its peak, its highest point. You can see that in 2012, we're going to omit this because this is a bit of an outlier. And back then it was really a jungle. Okay. So in 2016, you can see it took 550 days. In 2020, it took 550 days roughly. And if we project that same thing out in 2024, April 19th, that was the halving date, it should be between 500 to 600 days. Okay. In terms of month, it's about 18 months for the last two cycles. And then this cycle, if we project it out, it'll be 16 to 20 months, giving us a timeline of October to November. Now remember, history does not repeat, but it often rhymes. I know Michael Saylor said that winter's not coming back. As much as I like Saylor and I think he's good for the market, especially for Bitcoin and the overall general crypto market, there will always be a crypto winter or a stock market that's followed by a bear market, okay? It always does after a bull market. I don't care what anybody says, there will be a bear market. It's not going to be as extreme as before, a drop of, 70, 80, 90%. It may be only 30%, it may be 50% drop, but every bull market is succeeded by a bear market. And then the other thing that I look at to gauge where we are within the cycle is the MVRV, the market value to realized value chart. It gives us a Z-score, okay? So the Z-score is right here. It's in the yellow. When it's calculated between 7 to 8, you can see that's when Bitcoin is overvalued, indicating we're likely at a top, okay? So that's what it says in 2013, in 2017. You can see every time we hit this zone of 7 to 8, the Z-score right over here, Bitcoin is overvalued. Same thing with the 2021 cycle. It hit 7 right over here. Bitcoin's overvalued. But in this timeline over here, in this current cycle of 2024 to 2025, we're only at 2 to 3, indicating Bitcoin is likely still undervalued. So we still have a long way to go before we hit that Bitcoin top. So now that we have a rough idea of where we are within the cycle, let's take a look at the chart. So here's the ETH chart. For those of you who've been in crypto, you know we've been struggling. So since 2021, sort of ETH hit its max 48, 4,900, okay? It's been struggling in the last 2 years, in 2023 to all the way here. It's been trading between sort of 4,100 and 2200. So it's been in this range. So it's been bouncing up, rejected here, rejected here, rejected here, came through, pierced through the support line, and then came up. And then finally we got to here. And then as ETH broke this resistance. So this has been a very strong resistant line. And this is the first time ETH has pierced it within the last 2 years, okay? And then today, with the drop today, people were worried, but this former resistance line acted really good as a support line. And you can see right over here, when ETH hit 4,065, it bounced nicely with a nice candle up. So a good recovery today. So we can see that the price recovered. And if we take a look at the spot trading volume for BTC versus ETH in this chart, you can see that as we get along here, the blue line right over here, so that we can interpret the data properly, earlier on in 2021, right over here, you could see a lot of BTC volume, right? A lot of BTC volume. The blue line is basically the ETH to BTC volume, okay? But as we get here to 2024, 2025, where we're at, you can see that that volume has shifted to ETH, okay? That volume has shifted to ETH, so we see a lot of activity within the ETH ecosystem. So what that data says to me is that BTC is still the king when it comes to market cap and store value, whereas ETH is where the trading activity is happening and all the liquidity is flowing to. It may be suggestive that capital is rotating into ETH as people see a lot of action on ETH. Now we know that there's a lot of bullish signal for ETH. All the ETH treasuries that are buying, all of the ETH ETFs like BlackRock that are buying, they're buying in the $20, $30 billion. Besides that, the biggest signal for ETH, and I think the thing that's going to make it happen, are stablecoins. If you take a look at right over here where Scott Bessent, he talked about how the Genius Act basically secures America's leadership in digital assets. But here's the key. He says stablecoins will expand the dollar access for billions across the globe, which is easier to transact with stablecoins. And then also the key line is he says that there's a surge in demand for US Treasury, which is backed by stablecoins. So that is the key. Now, why are they pushing? Why is the administration pushing so hard for this? Well, the reason is because somebody has to pay for this ongoing debt that's ever expanding. Right now, the US debt is up to 37 trillion. You can see it ticks every single second that you are alive, and somebody needs to pay for this. So how is the US government going to do it? They're going to print more money. money and then issue more T-bills, and somebody has to buy up treasury bills. And we look at the current data of all the nation states who actually are funding the US and buying up their T-bills. You can see that Japan owns the most treasuries with $1.1 trillion, the UK at $850 billion, China has $750 billion, Canada has $440 billion, all the way down. You could see the new players that are entering besides nation state is actually stablecoins. And Scott Bessent talked about this. He talked about how it could be literally a $2 to $4 trillion stablecoin markets because they know the stablecoin issuers are actually going to be the new T-bill buyers. And for those of you who are new to crypto, coming from the stock market, Tether is basically the company that's issuing USDT, which is a stablecoin that's one-to-one back with the US dollar. You can see from their balance sheet right here that they released, they have 149 billion with total liabilities roughly 143 billion. So they're over collateralized, right, by 5-point-something billion. And if we take a closer peek at Tether's balance sheet, you can see right over here, the US T-bills, it's almost $100 billion. They have a bunch of cash, money market funds, and then corporate bonds down here. You can see their Bitcoin holdings is $7.6 billion, and they have other investments. But you could see that the majority of their balance sheet is actually made up of T-bills. And here's a really interesting estimate from Citi Institute. So they predict right now the stablecoin market at $120 billion. This is where it is. These are all the countries like we talked about that owns treasury bills. But if this market balloons into a $3 trillion market, you can actually see the stablecoin issuers will become the #1 holder of T-bills. So you can see this is why the administration is so focused and they put in a lot of energy and why they're so interested in expanding stablecoin market within the US and around the globe. So with all of those fundamental things happening to ETH, how do we get to 8 to 10Ks? So before we can answer the question of how ETH gets to 8 or 10Ks, look at some of the prediction that people have been throwing out for BTC. You heard of it all, 150,000, 175,000, 200,000, 250,000, all the way up to the millions. Now, if we take a look at ETH and we try to price out how do we get to 8 to 10Ks, remember this chart. So just as important as the ETH price chart, this chart right over here, the ratio of ETH to BTC. So this is the ratio of the price of ETH to BTC. If you look back here, all the way back to that 2021, okay, back in November, December, this was a really high ratio. Notice that it is 0.08, okay, 0.087, 0.88 right over here. This ratio has been dropping during the last 2 years. Obviously, we went through a bear market. And then also right out down here in April of this year, we had that tariff Armageddon, okay, where everybody thought the market would get nuked, and then we got the V-shaped recovery. So that ratio dropped really low to a 0.19. But if you used to look back just in October of last year, we were trading at 0.4, 0.5 just about a year ago. In June, July of last year, you could see that we were trading well above 0.5. So where is it today? It's right over here. So it's trading roughly at 0.3. 0.037, 0.038, so it's roughly around here. But just a year ago, ETH was right over here. Now, this is a really important ratio because it helps me formulate how I think BTC and by extension, ETH will behave as BTC continues to thunder up, okay? So remember that. This ratio at its height back in 2021, it was 0.088, 0.087. So it's really high. You can see that after this dump right over here in the April, tariff Armageddon, you could see that it is now starting to recover. Okay, it's recovering. It's getting up to that 0.04 again. Now, looking at this chart, it may be hard for some of you. So what I've done is I've extracted that data out from here onto an Excel sheet. And looking at this extracted data, you can see right over here, my BTC pricing goes from 115 to about 200,000. I won't predict outrageous 500,000, a million. I'm going to stick to a conservative approach between 150 to 200,000. And then in this axis right over here, you could see this is my ETH to BTC ratio, that ratio that we looked at in terms of the chart. Okay, so if we look at the ratio today, it's actually between 0.038, but I think you'll head towards that 0.04. So conservatively, if we take a look at 0.04 as a ratio of ETH to BTC price, if Bitcoin reaches 150,000, 155,000 at a 0.04, each should be closer to 7Ks, which I think what will happen towards the end of this year or early next year. And if BTC goes to 175,000, which is a very convincing number that it may reach, nobody knows how high it'll go or if it'll stop before that. But let's say it went to 175,000, we're actually now looking at closer to an 8K 8K ETH. That's at a 0.04, okay, 0.04 of this ratio. But I don't think it's going to stay that low with everything that's going on for ETH, all that buying power that's coming in, all that fundamental analysis, and all of this good things that are happening for ETH. I actually think it's going to trek up to 0.5. And if we return back to the 2021 cycle where we can get back to 0.08, back then, if you take a look at a 0.08, you could see at 150,000 BTC, it's already 12,000, okay, almost 13,000. At 175,000, you're looking at a 14, 15,000 ETH. Even if it doesn't make it there, let's say it conservatively builds up in between here, 0.603. At this number, you could see at 155,000, we're almost at 10Ks. And then right over here, we're almost at 11Ks, even if we just get to 0.063, okay? So this is what I'm basing off in terms of where I think ETH is going. The ETH to BTC ratio is really important to me. That's how I get back to that 8K, that 10K plus. Now, in the best of both worlds, we get to 175,000 or more of BTC while we get back to that 0.08 ratio that we did back in 2021. And then I want to talk about my point number 5 right over here in terms of the supply. I see an argument, or somebody who's new to crypto, they'll always say, you know, Bitcoin has a finite 21 million, there'll never be any more, but ETH has an ever ongoing inflation rate. Now, I'm going to dispel this myth right over here so that you can actually see ETH's inflation rate, it's actually decreasing over time. Now, remember this ultrasound money earlier? It showed the current ETH supply, roughly 120 million, 121 million. That's actually made up of the supply growth, so the number of ETH that's being issued, the inflation rate, and then also the burn rate. So if you take a look at over a 2-year period right over here, after the merge, okay, you could see that the inflation rate has actually gone down. And now if you factor all of that in, the supply growth is roughly 0.13%, okay? So this is how much ETH that's being burnt per year, okay? This is how much is being issued a year. And then you could see that's how they keep the supply growth constant. And if we plot this out, we can actually take a look. If we take a look at this graph through time, it'll reassure you that ETH is not an ever inflating balloon that you would lose value. Because if you look at the ETH annualized daily inflation rate over the past 10 years, starting from here at 12, 13, 14%, here's where zero inflation happens. You can see that over time, the inflation rate, the daily inflation rate has gone down a lot. And if you look at the past 3 years and you average it out, it actually works out to be negligible, okay? So it actually works out to be almost zero. And that's how the supply has been in constant at a roughly 120, 121 million through the issuance and burn. So if anyone tells you that ETH is going to inflate through the moon, you show them this chart. So given everything that we talked about today, you can see why I'm very confident and bullish on ETH getting to that 7,000-8,000. To get to that 7,000-8,000, it doesn't take a lot. That ETH to BTC ratio just needs to go back to 0.044 or any higher, and we'll do a lot better. And then in 2026, it's very plausible when BTC climbs to 150, 170,000. And if you're looking at the ETH to BTC ratio in a favorable ratio, you'll see how ETH gets over 10,000. So coming back to BMNR, BitMine, or SBET, I'm not worried about the day-to-day fluctuations. Why? Because I'm confident that when ETH charges up to 7,000, 8,000 or 10,000, BMNR and SBET are going to be charging up. If you look at today again, it went up by 5%. But if you look at the last 5 days, people were losing their minds when it went to $65, $70, and then it dropped down, and the whole market went into this bear market scare, asking themselves, are we in the bear part of this cycle yet? So I'm not worried at all because I see this as a long-term investment. Why? Because I see ETH charging up easily to $7,000, $8,000. Now, if you recall back 5 days ago when I actually pushed through the $70 line, ETH was not even trading at 4,800 yet. It pushed towards its all-time high, its previous all-time high. So you can imagine the frenzies and how bullish everybody's going to be when ETH pushes up to $6,000, $7,000. So for me, anything less than $100, and this stock didn't move at all. So I don't pay attention to the day-to-day, activity and what people say online. I focus on the long term. And for me, the fundamentals of this trade, which is likely the next biggest macro trade of our time that I see, is that nothing has changed my thesis is still ETH is going to be charging up. Okay guys, that wraps it up for this video. I hope that you enjoyed it, you learned something from it. So if you do, please consider subscribing, and I will see you next time.